This is Eric Muathe with Muathe.com. All is well. All right, let's take a look at a stock here that is breaking out based on its monthly chart and just now gave a fresh breakout in terms of price based on its weekly chart. So it's breaking out on the monthly and on the weekly. And I want to discuss from an educational standpoint some of the things that I was considering before sending an alert for paid subscribers or deciding not to send an alert for paid subscribers. So let me show you or discuss with you what I was looking at. So number one, there is this breakout here based on the monthly chart, and this is 3 years of monthly data, and the stock is moving above February's monthly closing high of 13.54. So based on price, this is definitely a good breakout. If we take a look at the parameters, which are the ultimate Muathe breakout minimum requirements, we can see that the stock does meet the minimum requirements. So in terms of RSI and MACDs, we can see that the RSI is moving to 3-year highs with this move, or just about to. And we can see at least one of the MACDs, if not both MACDs. We'll take this one here. One of the MACDs is at 3-year highs. So it definitely does meet the minimum requirements for the ultimate Muathe breakout. No problem with that. If we take a look at the weekly chart, we see that the weekly is also just now moving above this weekly closing high from February. In fact, you could also use this weekly closing high also as another option. Either of them is valid or both of them are valid. At any rate, we can see that it is moving above those two levels. So we can use the weekly closing high from February of this year. And that is at a price of 15.37. So right now, as far as the stock is concerned by itself, everything checks out in terms of price, breakout, and RSI minimum requirements, as we have discussed. So from an educational standpoint, let me explain to you why I will not be sending an alert for paid subscribers. Even though the stock might go on to do well, my issue with the stock is past behavior. Now, yes, the entire global market was down in February and March of this year, so the stock had a big drop, consistent with that market drop. But this is a huge drop from, let's call it a price of 1550 in about 4 weeks, would go on to trade below 350. That type of a down move is not a sign of stability. In other words, in about 3 weeks, it gave up all the gains from almost 8 months of work coming from here to these highs. So 8 months versus almost 3 to 4 weeks down. To me, it shows that the stock has a propensity not to hold on to gains. That's not what I'm looking for. I'm looking for stable, powerful instruments. So that's one major issue, actually, if not the biggest issue. If we take a look at this from a monthly perspective, we can see that this was a huge drop here. Huge drop. Also, if you squint and take a closer look, you'll see that it lost gains here on a monthly basis, lost gains here before the close of the month, lost gains here before the close of the month, lost gains here before the close of that month. So a lot of loss of price action. Also, we see a big drop here, another period of just losing value. Here it also lost monthly gains. And so I see a pattern here of a stock that from time to time has a decent move, but also tends to give up those gains very easily. And that's not what we are looking for. In fact, let's take a look at all monthly data. And we can see that we go back long enough, we can see there was another huge drop here in 2017, where at some point in the month, it was trading as high as 20. And by the end of the month was trading as low as 7. So that type of a behavior is not what we are looking for. Even though I do concede, just from a minimum requirements, it will not surprise me that the stock does well, but I choose to pass this opportunity and look for other more stable candidates. And by the way, just a brief observation is also when I take a look at the sector where it belongs, which is building, we can see that it is right now showing that it is the top performing instrument in that sector. And the issue here is, yes, it's doing well, but relative to the entire sector, it is the only one moving. So that tells me that there is no group strength. So over the last 52 weeks, it's gained 107. The next stock has gained 42% over the last 52 weeks. That tends to indicate that the sector is not powerful at all, which is also another, in my opinion, slight red flag. Now, if you drill further, you can see that it also belongs to the concrete products sector. And out of this sector here, there's 3 stocks, and you can see a big gap. So the stock is up 107 over the last 52 weeks, but the next stock is up almost 40%. That's a huge gap. It tells me that this is not a leadership sector and the group is not moving as a whole. So that tends to suggest to me that a pullback from the leadership stock makes more sense so that it can behave as the other parts of that sector. In other words, I just discussed from an educational standpoint that sometimes even a great looking chart can be passed up and you see whether you can find candidates. Can the stock do well? Yeah. Because it meets the minimum requirement, it has the opportunity to do great. But I would rather not be available for a potential drop, as has been the behavior over the last many years, since we would rather own stability and persistent growth and outperformance. Let me stop right there. From an educational standpoint, we'll see how this is going to behave over the next couple of weeks and months. Eric Muathe with Muathe.com. Love light, light love. Namaste.